webcast is now starting. All attendees are in listen-only mode.
Good morning, traders. Welcome to the Bookmap Platform Details webinar. This is Bruce at Bookmap. Risk disclaimer: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so what we're going to do in the webinar is first start with some of the resources. Take a look at the Bookmap website, understand what Bookmap is, how to get it, how to connect to data, the different markets and different data providers, and then look at some of the social media resources as well. And then we'll jump into Bookmap and take a look at the kind of general elements on the chart, start to define them, understand them, and then start to read the order flow. Okay, so putting all the pieces together, but just the basics. When you subscribe to Bookmap, it comes with education. There's a 4-part educational course, and that's accessible at any time. But then we go over that same content in the advanced order flow webinars that start every day immediately following this webinar at 11 a.m. Eastern time. So the concept with the education that comes with Bookmap is you have the course, and then the same course content is backed up in the live markets. So you can see and understand what's going on in the order flow in the live markets, and we start to analyze the price action, and based on that analysis, we can start to look for the future price movement in a specific direction. Okay, and that's what we do. All right, so based on our analysis, we start to anticipate those moves. Anyway, let's jump in and take a look at Bookmap. At bookmap.com, we'll scroll down. There's an intro video here for those of you who are new. And then a bit further down, just more information about Bookmap in general. There's Bookmap for equities here. I'm going to go over this in just a second. Let's see, Andre, is it possible to connect Bookmap to CCY futures? Like, I don't know what CCY futures are, like the E6 or, you know, the C. Oh, you mean with the currency futures? Yeah. Oh, yeah, absolutely. I think I even have one up, or maybe I don't. Let's see. Yeah, here's the anything from, you know, the futures from well, you know, CME exchange, no problem. Okay. Anyway, let's jump back here. I'll go over the Bookmap for equities in just a minute, but we'll stop here at connectivity and define what Bookmap is first. Okay, we're a software trading platform. We just have a very unique way of visualizing the market data. Okay, we're a platform just like you see here with like NinjaTrader, TTX Trader Pro, and Interactive Brokers Traders Workstation. Okay, so we connect though to these 3 platforms via their API. So you can go that direction if you want, but we recommend connecting directly to the data provider like CQG, Rhythmic, Gain, IQ Feed, Transact, and Dev Experts. Now the Dev Experts, we'll scroll right back up and cover that here. This is a Bookmap for equities. Okay, it's a great feed, NASDAQ total view with EdgeX or BATS. You can get either or both together. All right. Okay, a little bit further down, this is how you can get Bookmap under the packages here. You can subscribe yearly or monthly. So we'll click on monthly here, and you can see a few different versions. There's digital and global, and some distinctions between the 2 digital and global versions. Okay, the digital version here is free. You get free data for a GDAX exchange. Just 1 digital currency is all you can access at a time. The digital plus version allows you to trade right from your Bookmap chart into the GDAX exchange. You can record and replay that data. You can get access to up to 20 different digital currencies. And then you get the advanced education that I was discussing in the beginning. Okay, the global version, the only difference here between that and Digital Plus is the ability to connect to the futures market and the US equities. Now, that said, you will need to provide that data for futures and equities. Okay. Now, the Global Plus version, what that allows is includes everything, right? All the different markets that we support in data providers, etc. But in addition, you get our add-on indicators. Okay, one is the ability to trade right from the chart for futures and U.S. equities. It's a great advantage because you have the liquidity heat map in front of you. So front run high liquidity, hide your stops behind high liquidity. And then we actually saw a pretty good example of large lot tracker yesterday. This is a proprietary indicator that we put together that identifies larger players holding the majority of liquidity in the book. We have some imbalance indicators, an iceberg detector, again, looking for specific players where they are actually hiding their liquidity. They don't want to be seen in the book. And then a correlation tracker, okay? Let's go over our Twitter, at bookmap_pro. Follow us there for new and updated information. And then you can subscribe to our YouTube page here. I'll just go through the front page here. There's some intro videos if you're new, features and components playlist, just to go through all the different features. And then order flow video snippets. Okay, now these go through a very specific content that Bookmap can visualize. Okay, so this is how you're really going to start to integrate Bookmap within the way that you trade. So I'd recommend watching as many of these as you can, and they're very short and to the point. Okay, now it's this kind of data here that we go over in detail in the advanced order flow webinars. Okay, that's the education that you get with the subscription. All right, let's jump into Bookmap and see what's going on. We're going to look at the NASDAQ here, and I'm going to turn off a few different things here. Oops, this is the 6E. So back to NASDAQ here. Okay, you can see we have a cumulative volume delta sub panel here, indicator sub panel. I'm going to close that up. We're just going to keep this really basic and simple here. There's some other indicators as well of historical VWAP, which has been really great. We've really enjoyed that one. This POC indicator here. Okay, let's come back into here and turn that off. Okay, point of control indicator for the volume. All right, so here's the basic chart. And what are we looking at here? Okay, 3 elements on this chart, and that's it. There's no derivative or aggregation of data. Okay, this is a very objective view of the market. It might look like a lot. It's actually really straightforward here. 3 elements are the heat map, the historical best bid and offer, and the volume that traded on that historical best bid and offer. So let's go through in detail here, and I'm just going to give reference by using a candlestick chart. And I'm going to take all those other elements off the chart, and we'll start here. Okay, here's our 5-minute candlestick chart. Open, high, low, close of a 5-minute period. That's the problem with the candlestick chart right there. 4 data points for every 5 minutes. Okay, and we just don't know what happened. It's very opaque within that 5-minute period. We want an insight to these periods to understand microstructure and volume and how it traded. And that's where we just don't aggregate data. None of it is aggregated. So just we can easily bypass aggregation issues by just simply showing the historical best bid and offer and a record of it. Okay, and that's it. So what that allows us to do now is see the speed of moves. Okay, these really quick moves like that, you won't see that in your candlestick chart. And then secondly, the microstructure. So let's zoom in here. And what do I mean by microstructure? Okay, there's microstructures all over the place. Little areas of consolidation and breaks, etc. But these kinds of structures and how the auction and the volume react, or how it affects the traders is really what's key here. Okay, so for example, looking at some structure, well, we have a pretty big structure in this area here, and we broke down right here. Okay, we broke down below the swing, 1, 2, and 3 basically, this was at after 9:45, but we found some buyers here, and we came right back up to this is going to be kind of the point of control of this big cluster or structure, I should say. And you can see it even tried again here with a double top, okay? But it didn't accept, right? Well, this to begin with did not accept down below here. We found buyers. They traded back up into the range, but we just didn't find enough buyers to sustain it to stay in this range. We've just kind of dribbled off and found more sellers, and then we found more and more sellers. Okay, so now in terms of structure, we can draw on the chart. Okay, here's well, I just put it in a big structural area like this. Okay, here's our structure, then this is where we broke down and came right back up into it. Okay, and let's zoom out a little bit more. Okay, and you can see that there's another structure here. Now these aren't so micro either. And you can see how they relate. You're going to see it again and again. Just being able to see this is going to make a big difference compared to those candlestick charts. Because now we can understand how price is accepting in some of these areas. And again, it broke down. Okay, you'll note that on these pullbacks, like this was kind of a shallow pullback. Usually you see the pullback almost all the way back up to where it broke from. Okay, and there's like a vacuum in price when it has these steep moves that happen very quickly. Anyway, I'm getting a little ahead of myself with the microstructure. Let's add the volume onto the chart. Okay, and this is where we're going to start to start to understand the transactions that took place on that historical best bid and offer. And this is very, very typical. You can see when we're looking at this little area here, okay, and then at this 9:45 drop down below here, look at all the sellers in here. Okay, this is what it takes to move outside of a range. Okay, a lot of volume and a lot of sell volume that's hitting the bid. Okay, and well, they sold even down here at this lower low here. Okay, but we rotated back up, and right in here you can see where we found the buyers. Right, yeah, here they come in, and well, it actually kind of started here, and it was this little microstructure that was broken right here. Okay, this is what you can see in Bookmap. You start to piece this together. Once you start to see this, I mean, if you're bullish and you're looking for a short move, or even a longer, if you want to zoom out, you can. All of this applies to higher time frames. There's no doubt about that. Just to go over that whole concept again of microstructure and volume and understanding who's in control, well, here's our answer, right? Although there's a lot of selling down here, okay, we broke out of this little structure, and we see buy volume in here. Okay, we broke out of that little structure, and we start to trade up here, and there's more buying. Okay, and then the buyers really came in and lifted the offer pretty quickly. Okay, so now you can understand that whole concept again of microstructure and how the volume, makes a big difference. Understanding that volume in some of those structural areas. Okay, now that's just reading the transactions, and this is up to this point. This is all pretty common. We're all pretty accustomed to looking at this kind of data. Maybe you're not looking at it with best bid and offer just like this. You might be looking at it in some sort of aggregated bar or rotation, Renko bar. It doesn't matter. It's all aggregated still within a period. This is not. There's no aggregation whatsoever. So if I zoom in here, I'm going to show you that. Okay, and you can note that we're zooming in, and here are these two elements. Best offer is the red line, best bid is the green line. That's it. It's about as simple as you can get in terms of showing data in the market. Now, the transactions are here, these green dots. These are market buy orders. Crosses the spread, takes liquidity off of the best offer. Okay, so they're lifting the offer here. Okay, and the spread widens out, and no trade or transaction takes place up here. Instead, the next transaction takes place at the same price level here, but a market sell because the bid went up a tick. We see a spread widened out here by a couple of ticks. So now we can start to piece together very specific understanding of the aggressor and the the price and how they affect the price. Okay, so that's the way that we display the data with volume and historical best bid and offer. Now the third element on the Bookmap chart, and let's go to the current market here for this, and let's take off the candlestick chart. Third element is the heat map. Okay, and look at the heat map right here. We're gonna hold on just a minute. Let me turn it on. All right, here we go. Interesting stuff right off the bat. Well, let's put a volume subchart on here too. Oh, we've got it. Okay, never mind. Okay. Okay, so the heat map. What is this heat map that you're looking at? Okay, this third element. God, interesting stuff. I mean, you can see these players lifting their, raising their offers to higher levels here, and very high liquidity. We saw it was like 219 contracts in here. So if they're going to lift it and we find buyers, we're coming up to these areas here into high liquidity. That's where they're going to try to charge up into. And then look at them on the bid here. Anyway, I'm getting way ahead of myself. Let's go over what we're displaying. Okay, so everything to the right of this vertical white line here is the current market. Here's your best bid and offer. Your last traded volume is this number here. This is your price ladder. Okay, and then this COB column here. That's the only column we're going to go over for the moment. And all it's showing is your dome, your depth of market. Okay, you're looking at these numeric values here are contracts at these specific price levels. Okay, this is on the offer, and here they are on the bid. Okay, so we know that, yeah, there's sellers up here, there's buyers down here. Now, if you're accustomed to looking at the dome, you know that these numbers are changing all the time, very, very quickly, and we can see that happening right now. Okay, the problem with the dome is when the numbers change, the data is lost. There's no record of it. You're going to have to memorize it. What we do, though, is we record it high liquidity in the heat map. So you can see 53 contracts here, and it was just orange there. Now it's less, and there's 41 contracts. So it was orange here, and then it was yellow, and then look at now it's 24 contracts. Okay, and they pulled this liquidity. So what we've done is we've taken those numeric values, turned it into the heat map, and then recorded it onto the chart. And here's our record of it. Now we're starting to understand the behavior of these players on the bid and what they're doing. So it looks to me like this is a larger player. They were lifting their offer up into some of these areas here, or moving it higher here, and see how this player here, he's got high liquidity. Price starts to come down, he starts to pull it, price starts to go away. Not only does he add back in here, he actually adds up higher. Okay, and let me just go back in time a little bit here. Okay, so yeah, he pulled here, and at the same moment he pulled, he added 2 ticks higher. So it looks like he's interested in buying because he's kind of chasing, right? Well, not really though. When price comes back down into this area, he pulls, right? We can see it. It gets darker. The heat map scale is up here. From this kind of red is the highest liquidity, then orange, then yellow, then white, then blue, and then the least amount of liquidity is black. Okay, now you can adjust your heat map in many different configurations, but this is the setting I have right now. Okay, so now we can see that this player, he pulled, he added higher here, and then he pulled when price came down, but he added right back in as price started to move away, And then he actually pulled here again and added a tick higher here as well at 69.16. And then he pulled. Okay, so did he really want to trade here? And the answer is no. You know, this is he didn't really have the intent to trade. So what was his intent? Well, maybe just to show a lot of interest and try to get buyers to buy. That's possible. Maybe he's chasing, but he's not willing to, you know, buy at some of these higher levels. Who knows? But we can start to understand and answer the question is, does he want to trade? And the answer was no here. Okay, you know, we were looking for just some minutes ago as we see the move back down here, but then we saw them here, okay, starting to, and you can see it again, it's the same player here, it looks like. From the moment he pulls, he's adding higher. The moment he pulls, adds higher, okay? And then back and forth like this. So we're starting to understand this larger player here doesn't want to sell down in some of these areas. He wants to sell in some of these areas higher, okay? And that's bullish. And then look at the bid here. See, look at all this action on the bid, okay? This is without looking at the transactions in the volume, okay? Because this is really the, you know, a big part of the story here is that there was a lot of people that were bidding here at higher levels. Okay, and we're starting to put that together, and then we can also see the transactions that are taking place as well. This was the result of some of that higher liquidity here being pulled on the offer and added and being more aggressive on the bid. Okay, so we were looking for it to go higher. Well, it did. And where did it go? It went up to here at 69.25. And why did it go there? Because that's where the liquidity is. And that's where the transactions took place. Okay, so now we have a really good understanding of what's going on in the order flow. This is a much more complete picture than just looking at the dome, or if you're looking at maybe a footprint chart, you're just looking at transactions. You're not going to see where they're bidding and where they're offering. And here they are. That's the problem with the footprint chart. As well as that footprint chart is going to be aggregated data. You won't see the speed of these moves, nor are you going to see the microstructure. Okay, and it's just essential to understand that. I mean, here's a breakout on strong volume. Okay, up into our areas of high liquidity. Well, let's see if they come back to this area here at 69.22 and support it. Okay, because that's where they were buying earlier. Okay, and let's see. Well, we came back down. Well, maybe the move it started kind of here. I mean, you can also see that. I like this area especially because I can see them coming in with their aggressive buy volume. Okay, and did they support it here? Well, you can kind of see that a little bit here. It was on the first pullbacks, well, 1 and 2 or 3, and then it came down below her. Okay, well, we're starting to find some sellers here too. Okay, and now look at the sellers there. Look at this, 532 contracts. This is really high liquidity. Look at the effect it's having on price. Are we finding those buyers up in these areas? Nope. We're looking to go lower. We're looking to go maybe down to this area here around 69.17. That would be the first stop because that's where they initiated. And then yeah, even lower here, maybe even down here at 15. And here they are in the book at 15 with 51 contracts here. Okay, so now we're really starting to understand what's going on here and why did this move take place. Okay, well, look at the liquidity here. I mean, it was super high. Okay, we can look at this and we know that this is an individual actor. Again, very high liquidity, 531 contracts in the NASDAQ. That is a lot. Okay, especially in these days and this time. It depends, you know, like sometimes you're looking at a higher volatility and there's less contracts, etc. Nonetheless, we know that this is an individual actor, high liquidity, pulls, adds lower, pulls, adds lower. So, and look at the you know, the kind of effect that it had here on price. Price moved away pretty quickly. Okay, once he started to pull, okay, look, we found some buyers come in. Okay, interesting. So they were supporting it down here. Or let's say, I would say once you see this high liquidity out of the market, then the selling started to dry up, and we found buyers up in this area. Now they're lifting the offer. Okay, so this was maybe a bit of a shakeout. Get it down to this area here, and start to find some buyers and rotate it back up now. And let's see if we can, if this spoofer, and this looks very much like spoofing, doesn't come back into this market, then the next target up here would be 26, okay, because that's where the liquidity is. Okay. Now it's dynamic. Things happen and change in a heartbeat. Like this is a big change. Being able to see this larger player come in here like that. All right, so now we're see them on the other side here at 21, very aggressive. And look at the sellers just took that guy on. So actually, I kind of like, we look at this all the time in the advanced order flow webinar. The sellers took these guys on the bid. Okay, well, if that means that the sellers are interested here. Okay, so let's see if they can maybe then, if we found sellers here, let's see if we can get down to 19. Okay, now so we had a little bit of a change there. It looked like we were going to float back up into some of these areas, and then we found some selling here. Okay, it took on that high liquidity just like that. Okay, how many contracts here? 72, 69 of them traded. Here, this is making that distinction between real liquidity and liquidity that doesn't have the intent to trade, or traders that really don't want to trade. Here's where you can read it. Okay, here's your buyer, high liquidity, right? It's 66 contracts here, very high liquidity. One individual player, our large lot tracker is showing us that looks like 60 of those contracts is provided by one individual actor. Okay? And the sellers take them on, and they trade right into that high liquidity. Okay? And in the end, we see them take all that liquidity, right? And that's what it looks like. Okay, the transactions were met, or met that high liquidity. Okay, if we find some sellers in here like that, and they take these guys on, then this is the kind of what we start to look for and anticipate. Well, we know that there's sellers here. Okay, now this is kind of going back and forth a bit, but based on this, we start to anticipate. Okay, well this changed my idea in the order flow here. Okay? Because there was selling interest, and they reacted to that high liquidity in this way. Look at this guy down here; he pulls at 19. So this is that liquidity that does not want to trade. They pull. Okay, and we found some sellers trying to hit the bid again here. So if they're going to hit the bid again, I'm looking for this to go lower now. Okay, let's see if we can get down to around this 15 area. Anyway, this is really back and forth at the moment. And you can see players coming in again here. So it seems to be kind of in a range at the moment. But at this time, this is what we knew, right? We were finding some sellers. Okay, now they're starting to jump right back in. Okay, on that bid. Okay, and now they're pulling. So it's kind of fickle right now, and we're going back and forth. Anyway, that's putting all of these pieces together. Now, I'm going over this in real time, and we need to look and demo something here. Nice cluster of selling here. So the same happens though if I zoom out and look at much higher time frames. Okay, so you don't have to look at just a tick, or a few points, or even several points. You can look at much bigger pictures, and you can use the heat map on this much bigger scale here. Why is that? Because it's all recorded. Okay, where's the high liquidity? Look at these guys, 516 contracts up here. Okay, so and look what happened here. This is much bigger picture, and we're getting really good understanding. High liquidity here before the cash market opened. Okay, the reaction was up to the upside. Okay, and they got aggressive in this area here too, but the sellers came in and they traded through these areas right here of high liquidity. Okay, and we see the transactions taking place. Okay, we found some real sellers with some power here. Nice auction, the downside. Okay, return back up to where we broke from here in the structure. We found more sellers. Okay, and then bigger picture stuff. Look at they were providing high liquidity around 69.32, and they flipped over to 33. So here's your bigger picture, and you can look at the order flow and read it on that much higher time frame, as well as zooming in and starting to understand some of these other areas of potential spoofing, etc. All right, well, we got to go. If you guys are signed up for Bookmap, we'll see you in the advanced order flow webinar starting in just a minute. Okay, thanks for coming. Bye-bye.